Hello and welcome to Sectors Up Close. I'm Ramzan Karamali. Today we're looking at European utilities and my guest is Joachim Klement, Head of Strategy at Liberum Capital. European utility stocks have not performed well in recent years. In fact, the main European utilities index has not had a positive year since 2020. But with investment spending in areas such as green energy, energy security and environmental improvements, is this about to change? In terms of recent performance, European utilities have seen a strong recovery. Since the middle of February to now, the Stoxx Europe 600 Utilities Index is up almost a tenth. But year to date, it's still among the worst performing sectors. So what's driving this recent strong run? And can it be sustained? Well, to help answer that and more, I'm joined by Joachim Klement from Liberum Capital. Joachim, thanks so much for joining us. So what's behind this recent rally?
Well, sometimes it's very simple. These utility companies, which have had enormous cost pressures for the last 2-3 years, are now becoming more and more profitable. And especially their operating profits have risen significantly over the last 12 months.
But Joachim, can this actually be sustained?
We think yes, because the main driver that has led to this recovery so far were declining costs, in particular in terms of lower electricity costs to run the water treatment plants and lower input costs, for example, to buy windmills and solar panels, etc. This is going to continue for the rest of this year as energy prices and hence electricity prices will likely continue to fall. On top of that, we might even get a little bit of a boost in the second half of this year, simply because central banks like the European Central Bank will likely start cutting interest rates. And utility companies with their high amounts of debt and financial leverage on the balance sheet benefit disproportionately from lower interest rates.
Now, within the sector, we have the water sector and UK water companies in particular. They're under quite a lot of scrutiny at the moment. Are these ones to be avoided?
We think yes. On the one side, they are very cheap and they have seen the biggest growth in operating profits over the last 12 months, on average by about almost 25% EBITDA growth in the last year. However, the UK is suffering under an enormous sewage crisis and these water utilities have promised already to spend and invest more than £40 billion over the next 5 years in infrastructure renewal. And that's obviously going to cut into profits in the long run. Plus, regulators are looking into more strict regulation for these companies and potentially nationalizing some companies that are not performing up to standards. So in this environment, it is really unpredictable what these shares are going to do.
So just last week, we heard from one of the biggest companies in the sector, Siemens Energy, the makers of wind turbines and solar panels. It's upgraded its outlook. It's feeling very positive, but the stock has actually almost doubled year to date. So there can't be that much upside for investors.
Oh, you have no idea, because Siemens is the star performer for a very good reason. It was the stock that was hurt the most in the last year, as especially its Gamesa unit in Spain has had enormous troubles rolling out wind farms, operating at even normal capacity. Now Siemens has introduced a new head there, and it has clearly shown in its latest results that the cost pressures are declining rapidly, and it has significantly upgraded its financial year 2024 outlook. So all of these show that this stock, which was beaten down, now has clearly is on the way to a recovery. And so we think that, yes, 100% return in the last 6 months or so is fantastic. But there's still more to come.
So apart from Siemens Energy, which other stocks do you like within the sector and which don't you like?
Well, the ones that we like the most are Drax and Veolia Environment. Veolia Environment, French water and recycling utility, and in our view, probably the best quality utility stock in Europe, highly profitable, very well managed, with a decent balance sheet. Drax runs biofuel power plants in the UK, is investing a lot in the US to build new power plants there running on biofuel. And it just recently has refinanced its debt, which has taken a lot of negative sentiment out of the market. And we think that it, together with other renewable electricity providers, is one of the key beneficiaries of these declining costs in 2024.
And which ones don't you like then?
Usually, I would say the ones with lower leverage, financial leverage, and lower indebtedness, especially when interest rates are going to fall. But in this case, that is actually not really what I like the least. We've already mentioned the UK water utilities, which are completely unpredictable, and I would just stay away from them, even though they're very, very cheap and should benefit from declining interest rates.
Joachim Klement from Liberum Capital, many thanks for your thoughts. And that is your roundup of the European utilities sector. I'm Ramzan Karimali, and this is Reuters.